Welcome back, ladies and gentlemen, to another Mining Stock Education episode. I'm Bill Powers, and joining me today is professional mining stock investor Don Durrett of GoldStockData.com. I asked Don to come on the show and share his thoughts regarding the current state of the general equities markets and which direction he sees them heading, as well as his current thoughts regarding gold, the gold stocks, and where he's finding the best value in mining stocks today. So, Don, thanks for joining me again.
Hey, Bill. Great to be here. Thanks for having me back.
Let's jump right into the Dow. In the last six trading sessions, the Dow took some we saw a dramatic pullback. What are your thoughts on this particular pullback, and where do you see the Dow heading? There's some that are saying it's Dow 40,000, others that are saying this is the most overvalued stock market in history. What would be your perspective, and which direction do you see the general equities headed in?
Well, just to get started here, this downturn, I've personally been waiting for something like this for many years, actually. I mean, I just felt like the economy didn't really have strong fundamentals, that it was kind of a manipulated market, and there wasn't, underlying strength behind it. So I was waiting for a correction. So for me now that we've had this significant correction, is what's going to happen next. A lot of people are saying that we have a potential here for what's called a dead cat bounce. So we have the correction and then it bounces up. But when it bounces up, is the correction over, and does it continue rising to a new high, or does it falter and not make a new high and then fall lower? So that's the key here for the rest of the year. Does it go lower or does it go higher? We're going to have to watch and see.
And what would be your perspective on those that argue that the market is overvalued due to the low interest rates and the quantitative easing? Do you see the market as overvalued from a fundamental standpoint now?
I do. I mean, we see GDP at 3-4%, 3% the last 2 quarters, and this quarter is going to be around 3%, maybe higher. Could even be 4% in the first quarter. So you could argue that the economy is strong enough to support the stock market at these levels. But I'm not in that camp. I think that the underlying fundamentals are weak, and that it's overvalued, and that the only thing that can push it higher is central bank support. So they have to support it through buying debt, through outright buying of equities, or of keeping interest rates low. It has to be, in my opinion, it has to be manipulated higher. It's been manipulated up to 27,000. And that's the only way it goes higher. The underlying strength is not there to support these levels. And I think that is the reason why people are nervous, because they can kind of feel that. The big key here, the reason why I feel this way is demographics. Our economy is built on 70% consumer spending, and the people that spend the most money are usually from 30 to 50 years of age, or 30 to 55, somewhere in there. That's where you spend the bulk of your money. And the baby boomers are retiring, and so your demographics are going against you as far as increase in consumer spending. So how can you grow? And so that creates a big, it hinders you. So you can't. I don't think the U.S. economy can grow at 3%. Plus, if you bring in all the debt creates a problem. So we have this huge leverage, it creates huge risk, and I think that's one of the reasons why people are so nervous, is because of these, this very large risk. I mean, everywhere you look, I mean, we could talk all day about the situation that's happening today. I mean, these are historic levels. For instance, this year, the U.S. government's going to borrow approximately $1 trillion, anywhere from $900 billion plus, depending if we go into a recession. And then they have projections that they're going to have to borrow $1 trillion in 2019 and 2020. So that means the next 3 years, they're going to have to borrow $1 trillion. That's not good. That's going to create a lot of pressure on the dollar, going to put a lot of pressure on interest rates. So, these are reasons I like gold and silver.
Gold and silver also has been trending down in the last at least week and a half, along with the overall equities market. What are your thoughts on the relationship to gold? to the general equity stock market and also gold stocks. What's your comments on how the gold stocks have been performing?
Well, if you could, I like to use the HUI. It's a gold miner index. Is kind of the index, the indicator for how the miners are valued. Right now we're at 174, which is really low. And if you compare the HUI index to the gold price over the last 3 years, it's never been, the disconnect has never been this wide, meaning that the miners are undervalued right now versus gold. And the reason why is because the sentiment in the miners is just so awful that nobody wants to own miners. And nobody believes that the gold price is going to go up and stay up. And that's what's happened. So every time gold makes a run at 1350 or 1375, it falls back down. That's happened in 2016 and 2017, and people think it might happen again in 2018. So nobody's buying the miners right now. So you have this, but simultaneous to that, you have a lot of leverage in the miners, so that if the price of gold does go to 1400 or even 1450, the odds are not great that happens, and that's why people don't like miners. But if it does happen, the miners are really going to run. You're going to see the miners really take off if that does happen, because they're being ignored at this moment.
There's some producers that I hold, First Majestic and Tahoe Resources, and they've just been crushed in the last couple weeks. And with the downturn in the stock market, they were sold off pretty hard as well, which I attribute to just people looking for liquidity. And when there's a stock market sell-off, all stocks sell off, and gold stocks and silver stocks are still stocks. What are your thoughts regarding First Majestic, if we could start there, and then your thoughts on Tahoe Resources?
Okay, I'll talk about them both simultaneously. Maybe I'll focus on one. But when you look at stocks, silver miners, you have to look at certain fundamentals. For instance, one of the first things you have to look at is location. And Tahoe has a problem with location. They mine a large, and currently they don't have their mining license, which, will they get it back? So they're currently not producing. But they're producing in the country, in Bolivia, which is not a country which I would consider, a mining-friendly country. I mean, so location adds a lot of risk, and that was a reason why I never had Tahoe as a top pick, because of location. The next one is management. Both of these companies, so First Majestic is in Mexico, and they have all their everything in one basket. They're only mining in Mexico. They haven't diversified. That creates a little bit of risk. You always want to have a little bit of diversification. Management or people, so you can consider location as place, management as people. They both have very good management teams, so that's not an issue. And then the next P is project or properties. They both have very good properties, which gives them a lot of potential cash flow. So if Tahoe can fix its problems in Bolivia and get their mine back up and running, their projects are good and they have cash flow potential. When you look at properties and projects, you have to look at all-in cost. Tahoe actually has some fairly good costs. They have very good cash flow. First Majestic, on the other hand, they actually have high all-in cost right now, and that's the reason why their stock is kind of getting beat up, and a lot of people have said some negative stuff. And they recently took on $150 billion, and they had a very good balance sheet. And that's the next all-in cost is kind of growth potential. And then if I look at the balance sheet, so First Majestic had a really good balance sheet, but they just took over Primero, and a lot of investors kind of soured on them because now they have high all-in cost. Their all-in cost is about $16, which isn't great when the price of silver today is $16.30. So they're basically breaking even. That's not good. So if silver stays at $16 for the next quarter, First Majestic is not going to report good results. Now they could get their all-in cost down to probably 15 if they wanted to, but then they couldn't do their exploration that they want. So First Majestic right now, in the long term, I really like them because I think they'll survive. And if they survive, once silver prices go to 20, then they're healthy. So First Majestic's problem is their all-in cost, and their balance sheet isn't fantastic. So they need to fix that, and it fixes itself at higher silver prices. So once you get to 18, 19, 20, First Majestic starts looking really, really good. And Tahoe, they start looking really good if they can get their mine back in production and they get a good, relationship. But anybody that's holding Tahoe for the long term is taking some risk because of Bolivia, of course. So that's kind of how I look at these two stocks.
Yeah, I bought Tahoe after the social license was suspended, and I think you meant to say Guatemala, where their silver mine was.
I wasn't positive it was Bolivia or Guatemala. Okay.
Guatemala, which was 20 million ounces a year for a silver mine with over 300 million ounces. But they still produce, and this is the reason why I bought it, they still produce over 400,000 ounces of gold per year. And right now, after the recent sell-off, it's a market cap of $1.2 billion US, yet they're producing 400,000 ounces of gold a year. Plus, you have the full upside. If the silver mine, the license is granted again, the stock could double in a day once that news comes out. So that was my rationale behind purchasing that stock in December.
Okay, yeah. So I see that. You kind of bought the dip. Your rationale makes sense. Yeah, they've been slowly diversifying. So they bought Lakeshore Gold, which is a really good purchase. So yeah, 400,000 ounces of silver of gold. I just looked at their market cap, and I didn't realize that their market cap had crashed that hard. So they're actually as a gold miner alone, they actually look pretty darn good now that their market cap has dropped down to 1.2 billion.
Yeah.
I'm going to have to take a closer look at that. I was kind of negative on it because of the silver mine, but you're right. Even if you discount the silver mine, if you take that out of the equation, they look like a pretty good buy at 400,000 ounces. Now, the key is going to be how much, if they can maintain that 400,000 ounces over the long term. But the way that I value gold mining stocks is that if you can produce 100,000 ounces of gold and have good cost and have a long life mine, that 100,000 should be worth $1 billion. Now, again, you have to have both of those two. You have to have a long life mine and you have to have good cost, and a good location. Those are the three. If you have those three things, 100,000 ounces can equate to $1 billion. So if they have 400,000 ounces, you're looking at $4 billion. This is long term. This is based at $2,000 gold. But they could be valued just on their gold alone at $4 billion. So then you're saying, okay, if they do get their silver, then you're looking at, a five-bagger.
Yes.
Yeah.
Yeah, absolutely. That was the rationale. Where are you currently seeing value? I know your last article you wrote, one of them was top 20 gold mining stocks for 2018. Where are you finding the best value within the mining sector?
So I actually have another article coming out tomorrow in Seeking Alpha for my top 10 favorite silver stocks. So I had my top 20 favorite gold, and now I'm doing my top 10 favorite silver, and that should come out tomorrow. So where I'm finding value is, again, the location, management team, properties and projects, balance sheet. And then the other key one is the cash flow potential. It's future cash flow versus current market cap. I like to compare those two values. And that will show me a valuation if it has enough upside. So you want to make sure that you get a good entry price. You don't want to buy companies that are, depending on what you're trying to achieve. I personally like to look for at least a potential five-bagger. So Tahoe is kind of on the edge there for me. I'm not sure how much I really trust Guatemala for a long-term investment. But if you feel comfortable with Guatemala and they're going to get that back, then yeah, that one there is kind of like a borderline for me. But yeah, so I'm looking at what their current market cap is versus their future cash flow potential. And I like to get quality, the best value as a producer, of course. That's what I'm looking at kind of as a foundation. And then I'll look at development stocks, especially development stocks that have a path to production or look like that they're making progress towards production. And those stocks, I really like to get a stock that's going to build their first mine, and then where you make your money is on the second mine. And if you can get lucky and they don't get taken out, and then they do build that second mine, you can do really well. These companies they can turn into 1 billion plus companies. You can buy them at 50 to 150 million before they build that first mine, and then they build that mine, and then they build a second mine, and then they become $1 billion company. That's kind of what I try to do, but that's long-term investing. You're looking at 3, 5, 7 years sometimes for that to unfold. That's one way, and then you look at the producers to make sure you capture the near term. If gold and silver prices go up, say this year and next year, you want to make sure that you're positioned.
Do you like Equinox Gold, Ross Beatty's new venture? They're developing those mines, and they want to be a mid-tier producer sooner than later. What are your thoughts on their approach?
It's an interesting stock. I actually own it because they took out a company that I owned. They merged 3 companies together.
Did you own Anfield, or which one did you own?
Yeah, I owned Anfield. I think it has some good potential. It's actually a stock. It kind of fits into what I was just talking about a company's. Actually, it doesn't. It's the other area that I look at, and that's a company that has growth potential. So you have a producer who's basically a quality producer that's kind of made it, right? A company like First Majestic, they've already made it. Endeavor Silver, they already made it. And then you have companies that are building, stocks like Victoria Gold. They're building a mine, a development stock. And then you have companies like Anfield that are now turned into Equinox. And these are companies that haven't made it yet, but they look like that they have the management team and they have the properties to make it. And they look like a potential growth opportunity. So that's like the third leg here. And then the fourth leg is going to be your exploration plays. And I call those lottery picks. But yeah, Anfield, I like those plays because if you get lucky, once they kind of get some cash flow going, they look for growth. They look for other opportunities to grow. And that's really where you make money. Remember I said earlier, you're making money on your second mine. So Anfield, if they build a couple more mines, that's where your growth comes from. That's when you add 50, 100, 150,000 ounces when you add a new mine, and then that goes to your bottom line, goes to your production, goes to your valuation. And so that's kind of another area to look at. But Equinox is new. I haven't taken a close look at it yet, but it's definitely one to definitely look at for sure.
I know listeners like to hear companies you're putting your money in or that you're researching with the prospect of potentially putting your monies in. Are there any names you'd like to throw out there?
How I would answer that is that I don't look at specific companies by themselves, meaning that I don't expect when I invest in one company, I usually keep my investments small. Anywhere from 0.5% of my cost basis up to 2%. It's rare for me to go to 3% of my cost basis. And most of them it depends on the quality of the company. It has to be a really, really good company for me to go to 2%, but most of them are 1% or less. And the reason why is because you do not know which company is going to get taken out. You don't know which company is going to grow. And so what I do is I spread my money around. And for instance, my top 25 on my website, I own all of them, and so I don't focus on one of the top 25. I don't know which stock is going to be the home run, which one's going to do really, really well. I think it's really hard. So when people pick 20 or 30 stocks and think that those are going to be the ones, yeah, very, very possibly true. But my style is that I can't pick. I think it's really difficult to be a stock picker because things change all the time, especially with regards to takeovers and mergers and stuff like that. And so I like to kind of spread it around. And so when instead of saying, okay, I'm going to try to pick the best 5 stocks, if you will, you can do that, but it's risky, especially if you put 3, 4, 5% of your cost base into a single stock. And so for me, if one stock goes south or one stock gets taken out, it doesn't bother me. I like that if I'm going to lose a stock, it's not going to hurt me, if you will. So that's how I diversify. I diversify by spreading my investment dollars around. So, and then I only count the value that I put into the stock, not what it's worth today. In other words, if it appreciates in value, I don't count that. I only look at the cost basis. The only time I look at the value of the company is when I'm going to leave, when I'm going to exit. Where's my exit point? Then I look at the value. Okay, it's up 5, 10 bagger. When am I going to get out of this stock? That's when I look at that valuation. But the other words, I focus on cost.
Dan, I know you have the long-term perspective, and that's what you invest for the all-time highs of gold and silver that we expect. But have you sold any positions in the last year or two, even though you are a long-term holder?
Yeah, but I only sell when something changes. For instance, Lakeshore Gold, I planned on holding that stock until gold got to 2,000. When Tahoe Resources took out Lakeshore Gold, I sold.
Okay.
So I got a Tahoe like $12, and now it's down to like $3. So that's when I sell. I sell when there's a merger or when the story changes on my company. Otherwise, I let them ride until I hit my exit strategy. So my exit strategy is I don't plan to sell anything until silver gets to 50. And then once silver gets to 50, I'll sell some. And then silver gets to 75 and then 100. So those are my next 3 exit points. I might sell at 90 as well. But as silver gets higher and higher and higher, I'll be selling my stocks, my silver stocks. The reason why is because I feel that silver is very volatile. So once silver goes up, it's hard to trust it. And whereas I'm much more trusting on gold. I mean, you can look at the gold-silver ratio now. It's like 75-1, right? And it's going to squeeze down. As it squeezes down to 30, probably, I think it's going to squeeze all the way to 30. So silver stocks have 2-to-1 leverage on gold stocks. So as those stocks actually explode in value, so I'll be getting out of those. And I probably won't get out of my gold stocks. My first sell point for gold stocks, believe it or not, is $2,000 gold. So those are my and once gold gets to 2,500 and silver gets to 150, somewhere in there, I'll be at least 50% of my stocks I'll be out of them, because I feel this is a once in a lifetime deal. There's no reason just to keep holding and holding and holding. And I might be out of them 75% by then.
Yeah, you're pretty consistent on that. If you haven't sold for profit taking in the last 2 years, you're very disciplined in your exit strategy.
Absolutely.
Don, before you go, is there any updates to your website, Gold Stock Data, you'd like to share, or any concluding thoughts?
Yeah, thanks for bringing up the website, Gold Stock Data. So we are going to make a kind of a major update to it in a month, but it'll look all the same. We're going to create more of we're going to allow it for people that are free. They're going to get a better opportunity to see what it's about. Right now, you can't see a lot unless you pay the membership fee, which is $149. But I think that it offers a lot of value. One thing that's fantastic about the site, other than the forum, which is private, if you're a member, you get access to the forum, and the forum adds a lot of value. But in tandem to that, I think the real underlying value of the website is tracking your portfolio, tracking your stocks. Because without this site, there's no way I could track my portfolio, because you can literally monitor what they're doing and what I'm saying about them and stuff like that. You know what changed, the forum. So it's a great place to monitor. And in tandem with and then getting my insights on my newsletter. So my newsletter tells you, I give you all these lists of potential stocks. But thanks for bringing up the website.
Yeah, and if you're new to mining stock investing, make sure to get Don's book on mining stock investing. And that book basically lays out Don's philosophy. I've read it through probably 3 times, I would say. And then if you do subscribe to his website, the website is the working out of the approach to mining stock investing that Don describes in the book.
One final thing on the book. So the book is like a textbook. So it's the only book out there that teaches you how to invest in junior miners. There's a 100-page chapter just on the junior miners alone. So it's a textbook. So if you're a beginner and if you're not an expert in how to invest in gold and silver juniors, that book is perfect for you.
Well, Don, I appreciate your time. Thank you for joining me today.
Thanks, Bill. It was great.
Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.